onto the concept of chart of accounts. And this is really where you got to start. You got to start here. This is really the beginning of everything. So what are we establishing with a chart of accounts? Well, really, the primary thing we're doing here is we're establishing a numeric prefix to every single account, and also creating a numbering system so that somebody can easily identify, like, what kind of account am I dealing with just by that numeric prefix at the beginning. So your basic chart of account starter kit is going to look like so. So assets will begin with the number 1, liabilities 2, owner's equity accounts 3. You'll see what that means in a moment exactly. Revenues 4, and then expenses begin with 5. And of course, this standard can and will vary in practice because some companies are so complicated. First of all, they're not going to go with this simple 1 through 5 system that you're looking at here. They'll probably go with something that's going to include, maybe 1 through 9, or they might even go to alphanumeric. So you'll see them actually employ. This is definitely going to be true for some consolidated entities, where you'll see them, have like any account that begins with the letter A refers to, this part of the entity, and then the numerics after that, B, and so on, or whatever they want. It could be abbreviation of the some other entities that are affiliated with it. However they want to arrange it, it's pretty much up to you when it comes to setting up the system. Which is why when you're confronted with a new business and you're like, I have no idea how they're organized in terms of the chart of accounts, just ask to see the key or the legend of the chart of accounts, and that'll at least give you some insight into what you're looking at. Right. So again, we'll get into the specifics of how we're going to do this for Mike Speedy Transport 3000. And I might have heard me say in the previous video, or what I consider the previous video, account classification, you kind of have to have that one, understood. You have to have that one under your belt. Otherwise, what we're going to talk about here is going to be mysterious to you. Like, whoa, what's a current asset, right? Because that's one of the first things we're going to talk about in a moment. Here's current assets. Well, we established the idea of current assets in where? In the account classification videos / handout, part of my handouts as well. So that's why you kind of have to start there. Otherwise, you don't know what's going on here. Right, so again, first we're going to talk about how do we organize our assets. And I just alluded to, again, we're going to always begin with current assets are going to be first. That's going to really be your beginning of your chart of accounts, is going to start with current assets. And these are going to be arranged in order of liquidity, which is how easily an asset can be converted to cash. That's all we mean there. It's like how simple is that? Well, since cash is already cash, that's why it's no big mystery why we start with the first account is always going to be cash. That's going to be the beginning of any chart of accounts. We'll always start with that cash account. That's just the way it is. Right, now, after that, you have to decide, okay, what's our next most liquid account? That's going to depend upon what your business is at that moment, right? Because you might evolve and add additional accounts as time goes on. But when you're starting up, this is pretty much like, well, what do we have that we need right now? So you may not necessarily pick what is the truest order of liquidity sequence from the get-go. Now, in the example that we looked at, the next most liquid account that's a current asset is going to be accounts receivable. But in practice, you can argue that other accounts that you might encounter are a lot more liquid than that one. Like, for example, merchandise inventory, a lot more liquid. Why? Because our intent is to sell it. So just because of that idea, I would hope it's more liquid than your accounts receivable, for example, which, by the way, they can be sold as well. It's called factoring. We don't talk about it too much in here, but there's like a brief mention when you get to the receivables chapter, which is later on in the course. And then another account that you might encounter that would be definitely quite liquid would be short-term investments. I mean, this is an account where your intent is to take these these investments in stocks, or could be other things, or bonds, and you're just going to sell them at will. Well, obviously that sounds pretty liquid. So when you're setting it up initially, you might be confronted later on with the situation where, let's say you do add short-term investments, or you do add merchandise inventory to your business as an aspect, but you've already established a system like you observe here. 101 cash, 102 is accounts receivable. What do? Well, just add, like, let's say the next thing you put in there are short-term investments, just make that one the next count up. Now that would, of course, argue that probably this number that I'm giving you for supplies, 103, probably not the best idea. probably in practice, you would probably want to do what instead of that? 103, oops, try to get some of the noise out of the way here. Instead of that, you might want to make this maybe account 106 instead, just because you want to leave a little room for more liquid accounts that might arise in the future if you happen to add them. All right, so again, we start with current assets. Now, if we had them, that is long-term investments, or sometimes just referred to as investments, we could put that after, but we have no long-term investments. Next thing we had in sequence was of fixed assets, trucks. So I just added the account 115 trucks to the system here. All right, just cleaning that up there. All right, so it takes care of assets as it pertains to this business. Next up is going to be liabilities. Again, liabilities are going to be in order of, it should be beginning with current. I was just looking for the text myself there. And then go to long-term. Since we only had current liabilities in this situation, we just had accounts payable. That's always going to be your starter kit for liabilities, is that one. So that one's going to get 201 because we got to switch to the number 2 now. Now, as for what you're observing for owner's equity, again, this one, obviously, this order here, it should always start with common stock, then retained earnings, and then curiously, we dump dividends on here. Now, again, dividends aren't really strictly speaking considered part of our owner's equity or shareholder equity in this case, because we define that as common stock and retained earnings, whatever it says in the balance sheet, right? That's going to give you the story there. So why are we adding it to here? Well, it doesn't fit the definition of a revenue or an expense, and it doesn't really deserve its own designation, so we're just going to just, as a convenience, just make it one of the 3s just to get it out of the way. Right? How do we handle revenues? Revenues should always be your primary or operating revenues first, so fees earned, 401 will be our beginning there. And again, if you had additional operating revenues came into play, you would put that right after that one. And then, of course, if you had any non-operating revenues, would go after that as well. For your expenses, really, there's not a lot of semantic here. Really, the only main thing is put this account that I added. This was not part of the original example, miscellaneous expense, which is just a catch-all for something that's, an insignificant amount, doesn't deserve its own account. Just dump it in there, and that's, of course, key. It has to be immaterial. A bunch of little immaterial amounts. If you have a bunch of material amounts, it starts to add up to something, significant. You can't put it in miscellaneous anymore. You got to give it its own designation. So as for how we order these accounts for expenses, again, alphabetical would be okay with me as well. You could, again, the only other semantic that I would employ there is if you have interest expense, because that's considered a non-operating expense, you could tuck that one like just above miscellaneous expenses, for example. But again, miscellaneous expenses is considered an operating in nature, but again, because it's just kind of a catch-all, it's an afterthought, you can just put it at the end of the chart of accounts. So the reality is when you're doing this for real, there's a lot of flexibility in some areas as far as how you can order it. There's just some places where there's not strict guidelines, because if you go out and look at this in practice, you're going to see some companies adhere to some standards that are a little bit different than maybe what we consider to be letter of the law in an accounting class. And all you're looking at here is all the stuff I basically already talked about in the narrative there. All right, so that concludes the chart of accounts. Again, just a little sidebar, so to speak, before we delve into the main topic of interest in that third chapter of the class, which is going to be debits and credits. So pick up the debits and credits videos right after this one. See you there.